These are familiar situations where projections and extensions are used from an establishing trend after the IPO. Although the uptrend is steep and volatile, it is suitable to use a fib retracement to identify support against the new downtrend. This is because the large price fluctuations that continue for a large portion of the downtrend can be covered by large fib retracement levels with fairly decent precision. When the chart accelerates to new record lows, there will still be a natural pause to slow the drop near the IPO price. This is also true for the 1.272 projection level that does offer substantial opposition to flatten the trend. However, like in past examples, the large price fluctuations and wide proportions between fib levels leads to lowered precision as the downtrend maintains volatile trading around the 1.272 level and the $10 boundary for several years. A smaller fib retracement and projection produce a similar outcome and only helps to cover smaller reversal points in the period before 2017. A smaller range can help with the period after 2016, but would require a section of price action under the IPO price range near the $10 boundary to avoid the distortion to fib ratios caused by volatile price action. Alternatively, additional levels like the 3 level could be selected to cover similar details below the 2.618 level, adjusting to try and reach a balance between the small and large fib retracement and projection ranges makes little difference. This is again due to the greater volatility and large price movements after the IPO that distort fib proportions, regardless of the fib method used. Essentially, the problems of volatile price action can persist regardless of the swing points chosen. A fib extension, on the other hand, can choose price action close to the time of the IPO because the base trend is smaller and additional levels such as the 2.272 and 2.414 levels can add more detail to cover smaller swing points after 2017. When the base trend of a fib extension is extended, it introduces the problems of larger and more volatile price movements that affected fib projections and retracements. Fib extensions, projections, and retracements can be adjusted for more reliability when referencing more volatile price action. However, reduced precision can still be expected even when results improve, such as with the 1 level in this larger fib extension.